All right, folks, I hope you're excited like me. Yet again, another week of earnings. A little bit late to the party, but we're not going to talk about, okay, look, before open Monday, maybe already has happened here. But listen, folks, it's been a rough one. It's been a rough weekend for us. Busy, busy, busy. But we're still going to talk about these earnings for the week because there's a lot of good ones for you. It's a lot of smackers, slappers, bangers, heaters, bops everywhere. Okay, they're all of them. Every single thing you can think of, okay? That's right. We got a bunch of them. And we're going to be talking about three main focus stocks for me this week, but there's several others we're going to mention along the way. So let's crack right into it. Before open Monday, we've got these ones I've already reported here, so let's just be clear. I won't spoil anything. Palantir, great company too, Palantir, but the stock, hot garbage right now. Hot garbage. BioNTech, obviously you know them for their joint vaccine effort with Pfizer. And, given the lack of booster adoption, I'm sure they're hitting some rough times right now, folks. I think they are. I mean, they're not getting all those billions of dollars from the government. It's hurting them a little bit. Can't lie to you. Tyson, you know them for their chicken, folks. You know them for their frozen chicken. Now, I will say this is a company that overall pretty consistent, but it is one that actually hits a little bit of a difficult time here, given the fact that they are facing tougher comparables because there were a lot of supply chain constraints over the last 2 years, and people were buying anything and really everything and anything out of the freezer. So Tyson benefited big time from that, and now it's leveled out a little bit more, so they're fighting a little bit tougher about it. But since Tyson is actually more diversified than one might think in their product selection, they'll be fine. Duke Energy, Coty, the Madison Square Garden Company, oh yeah, folks, Hilton Grand Vacations, Global Ship Lease. That's right, we have a lot of experiences in here, and that's what's exciting. This is a big week for us, folks. You and your experiences, we love them. Lordstown, stupid garbage, get this out of here. And Party City. I don't understand how Party City is still a company. I don't know how they have not gone bankrupt yet, folks. It doesn't make sense. After close, we have the fraud Upstart. Also don't know how a company like this still survives, so, I don't get it. AMC Entertainment, you may know them as a meme stock, folks. I don't know. Don't know what to say about AMC besides the fact that this current quarter has one really good performing movie for them. We've got The Batman, right? That'll be in this quarter for them. That'll be a good thing for them, and I do think now, they had Spider-Man as well. Never mind, they had a couple good performing films, and if they were able to capitalize on some of that market, but they performed really well in the market, or in the box office. So actually not too bad for AMC, all things considered. And this quarter upcoming, obviously you have a massive core with Doctor Strange that's going to be pulling in a lot of money. So yeah, experiences are looking up, folks. Suncor Energy, Novavax, Plug Power's on an absolute downward spiral. Any of these alternative energy companies that skyrocketed so high over the last couple 2-3 years are now hitting all-time lows. Not really all-time lows, folks, okay. 2-3 year lows, let's be clear with each other. Very quickly. I mean, they're coming plummeting down back to earth. So they're going to need some good things to kind of invigorate them. Will Plug Power present it? I don't know. I like the company quite a bit. The revenue growth's been quite consistent, and I don't think that is something that changes despite recessionary environments. I don't think it does. Clover following them. Tarian, Tattooed Chef, I don't like this at all. There's a reason why the stock's down so much. Tattooed Chef is probably going to be reporting close to a loss, maybe potentially a revenue loss year over year, given the fact that, again, as I mentioned with Tyson, people were buying anything and everything, including Tattooed Chef. That doesn't mean they liked the Tattooed Chef products. It means it's all they could buy in the freezer section, and they thought it was worth a try. This movement for vegan food, it's not as big as they might want you to believe, unfortunately, right? Here they tell you it's the next big thing, and this trend, it's not picking up as much as they want you to say it is. Some people may occasionally get this, but they're not switching their entire diet to entirely veganism. And even if they are, no one's saying they're entirely doing tattooed chef. So again, I don't think the trend is quite there, at least at the moment. And overall, I think this stock's kind of dead money, because I don't think they're really going to be reporting many year-over-year growths, especially not double-digit growths, out of this company. So Lemonade, great company too. Great company with Lemonade. But the stock, terrible right now. Blink Charging as well. Terrible stock right now. Getting schmammered by the market. Absolutely schmammered. Tuesday before open is Peloton. This is a stock I really don't like going into recession, because people are not, I repeat, they perform very well because of stimulus and people had extra money to buy Peloton. People don't have the extra money in a recession, unfortunately, besides the rich of the rich, which is, I guess, their target market. But some people will be not buying them. Some people will be cutting their service, the people who aren't mega rich. But they do have the advantage of being mostly sold to rich people, right? I mean, we're talking about upper middle class people are getting Peloton. So potentially they'll be fine, all things considered. Norwegian Cruise Lines, expecting a lot out of Norwegian, okay? Expecting a lot of these cruise line stocks as demand is going big. Revenue should be looking pretty nice, okay? EPS still going to be a bit shoddy. I can't lie to you. Still going to be a bit shoddy, but I feel good about them. Builders First Source, Cisco. Cisco's, food transportation. You see the trucks everywhere, folks. You see them everywhere. Li Auto, the first of the Chinese auto stocks to report. Given what we see in data, they had a rough month last month, so worth considering. We'll definitely take a look at this, but could be rough for the other Chinese automaker stocks, depending on what this says. So we'll be looking out. Then we've got Bosch Health, can't forget them. Workhorse, Village Farms, and the Kronos Group. Nothing sparks my interest there, folks. They really don't. After close is SoFi, and now let me tell you, this is one that is an interesting earnings play, given the fact that I'm not opposed to buying call options for SoFi here. I'm really not. We're talking about a stock down 60% on the year, over the last year, I guess I should say, and is actually trading at cheap valuations for what they offer. This is a play I'm looking to buy some short-term call options. I feel pretty all right, and we saw it from the other investment companies earlier in the earnings season that there could be some really good numbers out here. So I feel pretty okay. Financials had definitely performed pretty well. Okay, I like SoFi here. I do. Roblox following them. You don't know what to say about Roblox, but they keep churning it out, folks. The stock getting schmammered, though. I mean, we're talking about devastation. Nancy Pelosi losing everything, thankfully. Good for her. Don't buy these call options on Roblox. Nancy, you finally lost. You didn't cheat the market this time, because someone is ruining it. Oxy, then the Trade Desk, and Coinbase. I don't know what to think about Coinbase. I don't know how crypto trading has really picked up, as the market's completely just been stagnant. I mean, it's been no movement at all out of Coinbase, if I'm being 100%, or out of the crypto market. I mean, you've seen it. The biggest of cryptos are just not moving, right? They're staying relatively flat over nearly a 6-month period at this point. So does that mean there's less trading? I don't know. We'll see what Coinbase reports here, but it's worth looking at. The crypto market's weak right now. Unity, game developing engine, fun stuff. Array Technology, Wynn Resorts is one of my focus stocks. I'll be clear with you. Why is that? Because I'm talking about experiences this week, and I love experiences. Expected an EPS line of $1.15 versus $2.41 of a year ago, negative. And obviously both these are negative. Personally, I think they beat on this EPS standpoint. It is tough right now still. I think it is. But overall, I think people are coming back in droves to these experiences. And you see a revenue line expected 30% growth, and 30% growth even expected the year following that. I think people are coming back in strong. And this year, I don't necessarily believe this is quite accurate. I think it'll be a 30+% on the year. So I think they'll be over $1 billion of revenue this quarter. I could be wrong, but I just feel really confident about experiences at this point. Matterport and then the rocket companies. Following them after close, or before open Wednesday, I should say, we have Yeti, Fiverr. Not a service I think a lot of people will be using when we're talking about a bad economic time. Also, I don't even get the point of Fiverr. It's one of those where it pays to be rich. If you're rich, you can just say hello and get paid $50 by saying hello, blank. Insert someone's name here. Get out of here. EVgo, Krispy Kreme. Nothing beats the hot sign on Krispy Kreme. Consistent. They'll be doing great business, folks. PaySafe. Then you have the Wendy's company. Look, the food, not great at Wendy's. Let's just be clear with each other. We all know this. They can't serve you a warm thing of food ever. They only serve you cold. That's just kind of how Wendy's goes. Unless you get a rare Wendy's, okay? Sometimes they'll put you cigarette ashes in there. Only once they did that to me, so that's okay. But these fast food companies are doing better. Obviously, you need to open up the dining. Some of these places haven't even opened up the in-store dining, and this has been detrimental still. I mean, this helps a lot when you have in-store dining open, so we'll keep an eye on that. ICL, PFG, Atotech, and Freyr. Okay, folks, the nose is stuffed as can be, but we're going to carry on. After close, we've got Walt Disney. Oh, that's right, Disney. And what is Disney expected? That's right, I'm using this page because it's still Yahoo Finance, but that's okay. This is a better indicator for us because this other page sucks, folks. Disney expected to report an EPS line of $1.20 per share, which is pretty nice. I mean, we're talking about 51% growth there, and I think they absolutely hit on this aspect. As I mentioned, Experience is doing super well. Disney Plus is almost, it's still kind of a negative for them because they're putting a lot into this. And it doesn't really include any massive movies from them, I guess. They'll earn, I forget what their deal was with Sony Entertainment on Spider-Man. But this next quarter upcoming, they're going to do really well with Marvel, with Marvel's Doctor Strange. So I feel really good about that. But again, it doesn't matter what they do in terms of that at this point. People are still focused on Disney Plus. Revenue expected to be up 29% year over year, by the way. Pretty massive, $20 billion here. But again, Disney Plus is the focus here. And you'll see this stock is at 52-week lows because Netflix absolutely bombed their report. And I think that's more of the lack of original content that's actually decent on Netflix. I really think it is, as well as their pandering. But I don't think that Disney Plus is a service that gets cut by a lot of households because it's still the cheapest service out there for what you get. It really is. So, and their original content is really good, and they're consistently releasing original content from the Marvel series, from everything else. And they just stole, obviously, the Marvel series out of Netflix and another series out of Netflix, too. I forget what they stole. I don't know why I can't pin it, but a classic telecom series everyone watches, folks, okay? I expect really good things out of Disney, but Disney Plus is what's going to matter whether the stock goes up, folks, and I think it will go up. Sandstorm Gold, I love me some gold, baby. Rivian following them, absolutely garbage fire, Rivian. What doesn't matter, obviously, them reporting deliveries, and obviously I don't think there are any deliveries yet, but maybe there are. Maybe I'm wrong. Rivian's been a piece of garbage so far. Dutch Bros. Is that the coffee company, folks? I don't know. Beyond Meat following them. Oh, yeah, I included Beyond Meat in here. Why? Because that's right, Beyond Meat They're expected garbage, okay? They're expected to post a loss of $1.04 per share and revenue growth of only 3% year over year. That is what I would consider a horrific quarter. Single-digit growth, if any, an awful loss of $1.04 per share. Look, this company was supposed to be headed in the right direction, and now they're headed in the absolute wrong direction, folks. And I mean, it's not bright looking. This chart looks pretty horrific, but you see why the share price is not near where it should. There's a lot of downward movement left in the stock. I'll just tell you that right now. There's a lot of downward movement left in this stock. I'm just throw it out. In this market, when you're posting a loss as well as no revenue growth, you get eaten alive, folks. Vermilion, Kinross, Coupang, Marone Bio Innovations, and Sonos. Love the Sonos technology, folks. The speakers are great. Thursday before open, Six Flags. I never know what to say about Six Flags. I never do. It's just they're not open during this quarter. I feel like maybe a little bit, but I don't know. I don't know what that year looks like for them anymore. Veru, Hymax. We have Tapestry. Oh yeah, you know Tapestry. Coach Kate Spade. Bangers of companies. Okay. Overall, though, I think this is a luxury company when you consider their brands. Going into the future, could be some concern there with their luxury brands. But again, it's mostly wealthy people that are buying Coach and Kate Spade products. So maybe not impacted entirely too much. U.S. Foods, Endava, Bacht, Crescent Point, and CyberArk. Then finally, after close Thursday, we've got Affirm, Aurora. That's right, a little bit of the sticky, icky. Don't like Aurora here, though. Garbage stock. Indy. Figs are not my favorite of fruits. I don't think they're anyone's favorite fruits. But I do like a Fig Newton sometimes. They're pretty okay. Navitas Compass. Rockley. Immersion. Joby. And Toast. Okay, look, folks. I don't know this one, and I have to know it. What are you? What are you? Restaurant point of sale management system, cloud-based restaurant software company, huh? It's a point of sale system. Isn't that interesting? What companies use Toast, do you think? $470 million of revenue last year, folks. This is a company I should have known more about in the past. Restaurant POS system is going to be doing great business. Jeez Louise. Is a stock here? All right, don't mind me. Is this a stock yet? I mean, folks, when did this company start? How have I not known about this company? They IPO'd last year and I don't know about them? And they're down 78% since IPO? Sheesh! They're at their 52-week low. That's pretty rough. Market cap's pretty high, given the current numbers here, but that's okay. Look, we had to find that out. And then finally, before Open Friday, Bio, Frontera, LifeMD, New York City REIT, McEwen Mining, IMV, PLX Pharma. Don't mess with these pharmas, folks. Humacyte, Honest, Superior, and Real Good. That's what I got for you, folks. Hope you have a fantastic day and week. Oh, yeah.